Well, we've got a cornucopia of news or a tsunami of data, whatever you want to call it. We'll start with retail sales coming in on the month up by 0.3. The forecast was for a 0.2 decline, so stronger there. And ex-autos up 0.1. So autos contributing this time, even though people thought they would not. Of course, it's different from the unit sales, the measure. The control group, still waiting for that number to drop. That's the one that economists tend to look at, leaves out stuff that's double counted. Import prices out. They are down 0.6%. Ex-petroleum down 0.2%. So a lot of that is energy. Okay, retail sales control up 0.2 after a revised 0.6 the month before. That matches expectations, and so we are still seeing Americans spend, but at a lower rate than they did in April. The other number that we care about, initial jobless claims, is unchanged at 262,000. So if you want to make it hard for the Fed to read the labor market, there's a good number for you. You don't know what's going on, whether last week was a freak number or whether it is now a new level. Empire Manufacturing, big jump there from negative 31.8 to 6.6. And Empire Manufacturing, the Philadelphia Fed, comes in at negative 13.7 after negative 10.4. So I'm not sure what you can make out of the regional indexes, since they are sort of the opposite of each other. I'll let you do the data check, and I'll see if I can find out what's going on with the retail sales and where the strength was.
What is the nuance of retail sales? What do we spend money on?
Well, basically, Tom, it looks like we spent money on everything. Very few categories of weakness, only really gasoline, which is not going to surprise anybody because retail sales are calculated in dollars. So as gas prices fall, so does the percentage of sales. And gasoline stations were down 2.6%. They were down 20% the prior month. But everything else shows mild gains from the last month's building materials numbers were down. And then in May, they rose 2.2%. I guess might have been a rainy April. And cars surprising analysts because they thought, based on unit sales, that might be lower, but they come in up 1.4%. Again, that's dollar volume as opposed to unit sales. And if we look at the department stores, up 0.4% for general merchandise, 0.3 for department stores. So people were out spending money. 0.4 gain for eating and drinking places. Tom continues to do his part for the economy.
I'm working on it.
And overall, it just kind of looks like people were still spending money, a little bit less than last time, but still out there spending.
Does this data dump really signal to you resilience or a labor market that is starting to get chipped away, that is starting to lose steam?
Well, it may be losing a little steam, but it's hard to see that it is rapidly changing, Lisa, because we still had that big JOLTS number. It is a 2-month delay, but it does show a lot of job openings still out there. And the fact that we didn't see a rise in jobless claims is telling you that there's something status quo about the economy now. It does seem to be status quo at a little bit higher level, but you can't really look at it and say we're going to see a big jump in unemployment coming, because right now the numbers don't support that.